Welcome back to the second half of the Future Show. Ladies and gentlemen, we're less than 60 minutes away from the cash open for stocks on Wall Street. We have Scott Bauer. We have the CEO of Prosper Trading Academy joining us this morning. Scott, good morning and welcome. Good morning. We have some economic data that just got released. It looks like tying into the inflationary discussion, not a real concern here still. I see, non-farm productivity came in at 4.6%, a little bit below the 4.9 they were looking for, below prior 10.6. Unit labor costs, though, is I think what a lot of people are going to be focused on. That came in at down 6.6%, not as low as the negative 8.9% they were looking for, but a sharp decline from the 9% increase that we saw prior. I mean, I guess this just sort of feeds into the narrative, and I guess one could argue that the real focus here in terms of data point this week, or inflationary data point, is going to be the CPI and the PPI later.
Yeah, no doubt. These numbers are not that far out of what was expected here. And CPI, PPI, that is going to be the focus. Everyone is talking about when is inflation going to really start picking up. So far, we haven't seen it.
Yeah, everyone's talking about when is on a couple different fronts. When is stimulus going to come? Right. Do you expect to see something, Scott, before the end of the year? It seems like lawmakers have a lot of incentive to get this across the goal line, as I referenced it this morning at the top of the show, prior to their winter break.
You would certainly think so, Ben. I've really stopped predicting not just if, but when they may pass something, because there's too much behind the scenes going on. Yeah. But you would think that by the end of the year we'd see something.
Yeah, you'd think we would have seen something by now. All right.
Yes.
When is, I guess, we don't have to ask that question in terms of when is the NASDAQ going to participate to the upside in terms of some of the bid that we've been seeing, because it certainly has been. We had all four of the indices to new all-time highs yesterday, I'd imagine. In addition to inflation, some of the economic data, this is a major focal point for investors as well.
It really is, and I still like the NASDAQ space here. In fact, I like most equities going into the end of the year here. I think that we're due for a grind of a push higher, again eclipsing the all-time highs that we just saw, and I think the NASDAQ space will lead that.
Scott, is this related to the weaker dollar, do you think, and the softness we've been seeing in the greenback?
I think it's more related to vaccine hopes, to stimulus hopes. Certainly the weaker dollar helps, and the dollar doesn't seem like it's moving anywhere at all.
Yeah, let's talk a little bit about the dollar, because we've been seeing some strength in some of the foreign currencies, the euro currency inching its way higher recently into a multi-month high as well, but not just there. I mean, it's been the Aussie dollar, the New Zealand dollar. We've been seeing the Canadian dollar even, which has been strengthening related to some of the energy bid activity we've been seeing in crude. I mean, oftentimes when we look for direction in terms of the greenback, oftentimes I look at some of the foreign currencies as well. Yep. Again, the dollar index basically a reflection of that basket of currencies.
Yeah, I think you have to, Ben, and you take a wide swath, like you just said, from the Eurozone all the way out, to Asia and the Aussie dollar for sure. But the one to focus on really right now is the pound, with what seems to be the never-ending Brexit saga maybe coming to a conclusion tomorrow. The pound has been really strong on hopes that there is going to be some sort of conclusion to this here. Still highly volatile. I mean, if something happens and Brexit doesn't get passed, we could see some weakness, but it's at near 2.5-year highs. Same with the euro. The Aussie dollar has been rallying. It's around 74 right now, but I think the key is that all currencies are really rallying against the dollar, because the dollar is showing lots of weakness based on recovery hopes and also stimulus hopes.
Yeah, dollar right now this week, or I should say ended last week down around that 90.47 level. They came off the lows on Friday, but certainly holding these lower levels. And hey, I just real quick want to zoom out. If we could just take a look back at that chart real quick in the weekly time frame, pointing out that we're back to levels we haven't seen since April of 2018. We're talking about some key levels down around that 88 level. Scott, let's talk about rates. The TNX back to 1%. It's kind of counterintuitive, I guess one could argue, in terms of what we were just talking about as far as the dollar. Certainly not a reflection of what we've been seeing in the TNX.
No, it is counterintuitive. And again, I think what you're seeing is, the hopes for stimulus, the hopes for the Fed not tightening up per se, but things just getting a little bit better. And, that's certainly on people's minds also about the inflation data or, the potential of inflation. But yeah, that dollar number for the TNX, though, I think is more psychological than anything. So
Sure.
if we really hit that, I wouldn't really expect the market to act so negatively.
Yeah, I've heard that from a few of our guests, and I've got my eye on the March highs. Should this upside momentum continue in rates, certainly as long as we remain below that, it doesn't really indicate that anything's changed as far as sentiment, as far as what we've been seeing. Let's talk about how lower rates kind of feed back into the discussion we were just having a minute ago about indices to the upside. I mean, certainly they haven't hurt.
They definitely have not hurt. I mean, it's that, the Ameritrade, right, where there is nowhere else, or there is no alternative, and the lower rates certainly feed to higher equity markets. And even with the TNX and rates just inching up here, it's just not enough to really make big money or money that's in the market, pull it out to start putting it in to the bond market, at least not in my opinion.
Yeah, here's a good look at that chart. We've got rates, TNX in the purple line. You can see holding at these lower levels has been, it seems like, supportive of that upside momentum. Scott, all the talk about inflation, rates, the dollar, it kind of feeds into, I think, what a lot of financial market traders are going to be looking at this week. You've got some activity of the ECB, Bank of Canada, next week the Bank of Japan, Bank of England, and the FOMC. What should we be looking for in terms of central bank activity?
Well, first, I think you have to really look, and see what happens with Brexit. Not that that's going to make a defining decision here for any of the other central banks, but that's a pretty big deal here. Then, again, Ben, we've been talking about this for, it seems like 3-4 years.
Yeah.
But, the ECB is expected to add more stimulus, and I think that is still the key focal point around the world, is that central banks are going to continue to be accommodative. They're going to do whatever they can to keep rates low, to stimulate their economies. And, that's pretty much the same as what we're seeing here as well.
Yeah, we'll see if Fed Chair Jerome Powell starts to pull out his hair. He's been urging lawmakers so aggressively to do their job. Scott, really appreciate you joining us here. This is a great breakdown in terms of a look at the financial markets, talking inflation data at the bottom of the hour. Ladies and gentlemen, Scott Bauer, thanks again. Scott's the CEO of Prosper Trading Academy.